Hey guys, welcome back to another lesson of price action trading. In this video, I'll be covering how to do market analysis. So far we have identified higher highs, higher lows, lower highs, lower lows, and then trend lines and support and resistance levels. While we were learning all of this, we also looked at different kind of price action we would look for in the market. Now it's time for you to identifying the bias, identifying the direction of the market, and how to do analysis on your own so that when you're taking a trade, when you're looking for the trade, when the next Sunday comes, you are able to analyze the market. First, you have to become a good analyst. Only then you will be able to become a good trader. Now, I'll teach you how to analyze the markets. So, without wasting more time, let's begin. So, we have been working on Euros USD recently in the video. So, I'll just move on to USD JPY now. I'll delete all of this. Yeah. So, let's begin. Now, the market was ranging for a very long time, but now you see there is a breakout right here. It's a nice price action. I did see this price action, but this candle came in after the news. It was too late to enter. So 1 hour candle was really big. So a stop loss would have been a really big one. So that's why I didn't enter this trade. Similarly on USD CHF, there was a range going on in a downtrend, but the price gave a breakout. Again, I couldn't enter because of the news. The candle was too big and the stop loss would have been very large. I couldn't enter again. So I had analyzed these pairs and were looking for different kind of price action. But when I see a breakout, see this, there is a breakout right here, USD CHF, but I couldn't enter. Stop loss would have been very big and then, I wouldn't get 1:1 or something like that. Now let's get back to this. Okay, imagine you are in the market. Now it's Sunday or Saturday and you want to analyze the pairs. So how you do it is first you start with checking out the market by zooming it out to see whether a trend is going on. Right now we can see there is no trend, right? There is no trend. The market is in uptrend right now, but we can't draw trend lines. That's what I mean by trend. Right now there is no trend. There is no double touches of, higher high, higher lows. The best angle to find a trend is around 45 degrees, and this is not around 45 degrees. I think this is around maybe 80 degrees or something like that, 80, 70 degrees, 80 degrees at least. So I wouldn't see a trend right here. I would wait for price action to normalize first. Right now it's just jumping around. There would be correction in the market. It might retest the levels again and then continue. So anyway, let's begin how to analyze the pairs. So first we'll mark the swing high, swing low so that we have support and resistance levels. And let's put it here. One will put here as well. And let's actually shift to weekly time frame. Sorry, my bad. I didn't do it in weekly time frame. Yeah. So we'll delete this line right now. Okay, let it be because it is acting as a resistance. We'll leave it there. Now we'll create one here. Then there is a swing high right here, but there aren't any touches here. Okay. So I think the bottom line is not going to do anything good for us. So on the weekly time frame, we have this 1, 2, 3, and 4. So the max price action right now you would see is till here and not more than that by tomorrow. It can do something else as well, but we can see there is a wick right here and there are no bodies closing in the recent times around this area. So if the price reaches here, it will see some kind of rejection. Let's mark this weekly support resistance. Now let's go on the daily time frame. On the daily time frame, we can see the price action. Okay, let's leave it there and add a daily line. Okay, yeah. Let's move this as well a little bit. So that even though it's weekly, but it is acting a good support on daily as well because we are covering a lot of wicks. Now I think for daily as well we have enough zones. Yeah. So we have a daily support resistance. Now let's look at this pair in this way. While going up, whenever the price has moved from up here, from around this area, below this area, the price moved up. What has price action done in the past? Right? So we can see right here that the price came here, like it was here, and then it moved up and it retested this level and in fact went down to this level and then moved up, right? So the price went up around this area and then came back, retested, and then moved up. That's once. Again, here while moving up, it has retested this level a lot of times, right? That's twice. And then here as well, that's thrice and four times now. So why would the market do anything different now? Imagine this, the market four times while going up did this, and once around this level. Even here, if you see, the market has come here and retested this level to move back up. So why would you think, or why would we do an analysis where price action is not doing something like this? And we would like to enter in a position which is retesting this level and then going up. Something similar to what has happened in the market. That's what it means. Market repeats itself. No? So that is how I analyze my trade. So this is one pair. I'm going to do many more pairs with you guys today. So now what we do is now we see it in a way that the market has to reject from this level. So we are looking for a price action like this, and we are looking for a trade which goes upside. So our bias is bullish. We are looking for a bullish trade, not a short trade, a bullish trade to capture maximum momentum and a higher risk to reward. Now let's delete this line because we'll go on a lower time frame and see what kind of smaller support resistance levels we have around this area. So I can see when the price has rejected from this level. The price has rejected on this level right here as well. Yeah, exact same way. You can see the price moved up, it retested and then moved up here as well. Before touching that level, the price moved up, retested and then moved up. Yeah, price retested. So first rejection was around here. Let's put a line so that it's visible throughout all the places. One, two rejected exactly from here. Three rejected exactly from here. So I hope you are able to understand this. What I'm doing, I'm giving you simple way of reading the market. You can see this line has been used to retest and then move up to finally, it retested again, but stop loss isn't hit. That's what we want. The stop loss isn't hit. The price moved up and then came back and then did this, even though the market was very slow right here, but eventually it reached here. It took almost more than 10 days, almost 12 days to do this market, but that is what swing trading is. And it's not always going to do something like this. A lot of times it's going to be faster, and sometimes it might take a lot of time because it's a swing trade. If you see right here, the market started on Friday, 21 March, and Tuesday we were done, right? Friday, Tuesday, so 3 days, exact same trade. So sometime you would be in a position where exact same price action is taking a lot of time, and that could happen to anyone. But this is what we are looking for right now. There is a good chance that price might do something like this, where price is moving down and then coming back again and then retesting this level to go up. Because this was not rejected, I wouldn't be in a price action which is as smooth as this. I know it might sound stupid, but this is what price action is. this is what price action is, because it is happening right here in front of you. This has happened here, and this has happened here as well in the past, exact at the same level. Exact at the same level, a similar kind of, very similar kind of price action is happening. And then here as well, a very similar kind of price action is happening. And I don't know, in the past year. So exact this level, the price action, exact this level rejected. The price moved up till here, rejected, and then when this level was rejected, exactly then, when the price moved up and broke this level, you can see the price has nicely, even though coming back right here, but price has reached this level and not hit the stop loss. So if you want to be in a trade in USD JPY next week, wait for a price action like this. I mean, the price might directly go up here. It's not a cent percent surety I'm giving. It's just I want to be in a trade where the market has done this, something like this, retest this level, retest this support again, and then move up. Whenever good entry signal I get around this area, I'll enter. I'll put a stop loss around this level, whichever, whatever is the low, and then look for a buy till here. This will be my target. It's as simple as this. You don't have to do anything else. So we'll see if the price action does something like this. Only then we enter. If it doesn't, we do not. It's the most simplest thing. If it doesn't, we do not. If the price action wants to do something else, like price is just moving up right here and then throwing all its tantrums, I don't want to be in the trade. I'll be in the trade only when the price is coming down, rejecting this level, retesting this level, and then moving up. I'll be entering around this area. That's it. That's the simplest way to enter the trade. I know I'm saying this again and again, but it is the easiest way to see the market. But a lot of people are not able to see the market in the same way. And that's why they are not good analysts. You have to see the market, you have to see the price action, and you have to trust on what the market is doing. Even though if it comes back to hit your stop loss, it's fine. You analyze the market, you took a trade which you believed in, that is enough. That is what it means to have a win rate of 50, 60, 70%. That you will be hitting stop loss even after analyzing the market in the right way. That is what it means. Now, let's look at some other pair. Let's go for AUDJPY. We'll start from weekly time frame. I can see, I can move it here, but then it's not a good area. I'll put a line right here. Yeah. And then we have, let's add all the lines. Option H. We have this, and we have this. Yeah. So we don't need to go way lower right now. I'll in fact remove that last line because it's not required. The market will take months before it reaches this price. So we don't need it right now. So we can see this is a swing high, and let's try to move it here and see if it is touching this area. Yeah, it almost did. Yeah. So this is a better resistance. We'll just move it a little lower, and then let's try to set this. We can see there is good rejections. I mean, this could be resistance, but this is giving me what, two touches, three touches. Yeah. And this, okay. But I like this level as well. So I'll keep it here. Yeah. So one, almost two, almost three, almost, this is four, this is five, six. Yeah. So it's a good resistance area from where the price can react. And then let's mark these lines. Weekly support resistance. Now let's go on the daily time frame. So I see a swing right here that the market is doing a nice swing from this place. And let's zoom it to make it better. Yeah. So we can see one, two, three, 4, 5. So good number of touches right here. And then I think this one is very closest and it's enough for us. Now the price action is right here. So we'll just see is there anything else that we can mark. No, I think this is sufficient. So daily support resistance level. Now we can see there is a resistance right here. So now to enter a trade at this position wouldn't be a great idea. You can enter a trade when you see price reaching around this level. And we have seen, let's see how many times the trade, the chart, the price action. The price action has flipped from this level when reaching around here and how many times it has continued to upside. So let's go in the past. This is weekly and daily SR. Let's start from here. The price came here rejected to go down. The price came here rejected to move down. The price came here rejected to move down. When the price came here at this point now, during this period, the price is retesting this level and then going up. The price came here, rejected this level, retesting this level, and then going up, right? And here as well, retesting this level, rejected, retested, going up. Price coming up. That's what we are looking at. Price never moved straight towards upside. Yeah. So this is what we are looking for now. The price will reject this level, retest this level to continue up, to break this resistance area. Because in the recent times, the price has done this. And you can enter a trade where you are entering a short position from right here to here because these are daily candles. That means it contains a lot of momentum and good position in it. You know, it's going to close in 1 week or maybe 10 days. Maybe I think 5 days, 3 days is good enough for price to move from year to year. And it has in history. But we have seen consolidation as well at times. But a lot of times in 5 days, the price is reaching to the bottom. And what we want to see around this level is a good price action, right? A short. How do we short this? So right here, the price went up. And there's a reversal pattern, and then 50% discount. The price came down. I mean, I would be in a long trade, but I want to show you guys how to do this stuff, how to analyze. So that's why I'm doing it. I would rather be in a long trade because the momentum is bullish and the odds of market moving up is higher than continuing down. So you can go for a higher reward. So you can see on the 1 hour time frame, the price changed direction. It went here. What you have to look for is a new entry signal on the second time to go down. Again, yeah. 1 hour was bullish, acting as a support zone, and then price broke structure, retested, went down. So price action you'll have to determine when it is happening, what is looking good, what kind of price action is happening. If there is a price action like this, of course you won't see a structure change so easily. But there is a structure change right here. There is a structure change, and the price moved down to the middle, and then it came back up again, and kind of creating a lower high to continue making a lower low. So this is a lower high, this is a lower low, and now this is a lower high, and there is a good entry signal to short, and the price moved in like 3 4 hours. That's it, to the daily range area. A very small trade. and a very fast one. Yeah. So this area, this price level is acting, I see, as some kind of support zone. It's acting as a support zone as well as resistance, of course. So right here as well, you can see it's almost touching this level right here, right here. So it's kind of acting as a support zone. But if the price action is making structures which would be nice when coming up, and you want to enter a short position, you would look for a 1 hour structure change right here to continue down. I hope that's clear. If you want to enter a trade, you want to see a price action where 1 hour time frame is creating structures like this, like this, like this. Make it, yeah, this. Wait for entry signal. Too short till here, something like this. So this is how you read price action. This is how you analyze the market. This is how you look for trade. But you always need to wait. Don't be in a hurry. Don't try to think it a way that you can keep a very good big enough stop loss. You don't want to keep a very big enough stop loss. You want confirmation. You want to see price action to change its structure and give you a good entry signal, a good stop loss, and a good risk to reward. Only then you enter, and you have to wait for all of this to happen, right? Because the price might not come here, and price might just directly go down. Right now, I am already in a trade. I don't know if it's going to hit my TP or not, but that is part of the game. That is part of the game for me. I am in the trade since it's almost third day now. I entered on Tuesday and the price went in a very big drawdown. That's why you have to give your stop loss a good enough breathing room. Imagine I have, so this is 24 and this is 196. So I have around 20, yeah, 25 pips of distance from the lowest point. This was the lowest point, and I have around 25-30 pips of distance. That's why my stop loss didn't get hit, and the market eventually moved up, and now it's ranging around this area. The price might just go down, but I am trading for the bullish momentum and I am looking to enter. Like my target, you can see it's already at 661. So I didn't prepare this at all. I didn't add, you can see there is no lines for me right here, but AUDJPY, okay, 635 and 661 is right here. But I will eventually move it to 635 because I can see there is a higher chance of rejection right here. I will in fact do it now. AUDJPY, the max point is 635 and I want to close my trade at 635. This is it. 1 is to 3 is my risk to reward. If the price is hitting this area, I'll get a 1 is to 3. If it isn't, I'll have a minus 1% loss. That's completely fine. So, so this is how you analyze the market. This is a different kind of analysis you see right now because the market was in a downtrend, but I had seen the daily time frame. You can see I have different type of analysis right here and multiple daily SRs are marked right here to create a zone for me. Okay. And in the Sunday analysis video, I had said exactly this resistance line where change of structure can begin. So I analyzed after Friday and it was on Sunday. So the market had closed on this candle and you can see that video dated everything. You can't change the video once it's loaded on the YouTube. So on Sunday, I had predicted that the market will change structure. Change of structure, I hope, because if you have seen the video in this course, change of structure is lower high was here, lower low is this, and the market changed structure from this line, exact this line. And I had drawn this line, I had written this text in the Sunday analysis video, and this happened on Tuesday 1 p.m. Right? So This is the exact same thing I have been teaching you in this video, that I look for structure, and this line is mainly because I have seen price action in the past the way I just showed you, that the stage change of structure will happen at this level, and it has happened at this level. That is the most important. Even though there will be a lot of times that all your analysis is good and you might not hit your target, and either your break even will get hit or your stop loss will get hit, but you have to analyze like this only, and you have to trust in the system. The market doesn't know you at all. Okay, it doesn't know what your target is, what your stop loss is. It's not hunting you at all you have to do is wait for price to do what it's supposed to do. Let the market do what it's supposed to do. Don't try to, move your stop loss or anything at this point, because the price right now has created a really good structure, and it's right now just consolidating. It might just come back till here and then move up, right? Because there's a trend line right here. I can see a trend line right here, and the price might just come around this area at night and then move up again. So that's completely possible. Or again, take a rejection from exact this support area, or it might just break this level, hit my stop loss, and we are done for this trade. But that's what your win rate means, that out of your 10 trades or out of your 100 trades, only 50, 60 trades is going to work. Sink that in. Only 50 or 60 trades is going to work out of 100 trades. So that many losses you have to see, and that many risks you need to accept. You need to accept those risks. You need to accept that 1% losses. I will see a loss. If I see a loss right here, it's fine, because eventually I'll hit a take profit which will recover 1 is to 3 or 1 is to 2 for me. So I have mixed rewards. I sometimes have 1 is to 3, I sometimes have 1 is to 4, and the minimum is 1 is to 2. But I do get 1 is to 3 and 1 is to 4, and sometimes 1 is to 5 as well. I have gone as far as 1 is to 12, 1 is to 14. So I don't think if I face a loss, it's completely fine. I don't think based on, I did the analysis and everything. I waited for 3 days, and I could have closed right around here. The target moved almost 1 is to 2, and I could see the price consolidating, rejecting, and everything. There were big red candles, a lot of signals. It's fine. It's fine. It's my win rate if stop loss gets hit, and I know when to do risk management and when I shouldn't. So at this point, I am not moving my stop loss to break even or anything. I let the trade do its thing. I hope that's clear. And I hope it was a good lesson for you guys. I will keep making videos like this and more advanced videos now. I have taught you a lot of different things like market structures and trend line, support resistance levels, the key level areas, the kind of price action you look for, and I'll keep making those stuff. If you want something which you want to learn and which is related to price action or maybe psychology, just drop a comment. I will do it for you. Just drop a comment and you will see the video coming soon. Okay. I hope you like this video. So make sure you subscribe and you like the video and join me on the Telegram. I am putting a lot of midweek updates on Telegram as well. And if possible, also follow me on Instagram. Thank you for watching, and I'll see you in the next video.